Hello and welcome to episode 2 of the Filter the Noise podcast, brought to you by DefiDive. Before we get into this episode, we just need to add a disclaimer that none of this information is financial advice. This is just two individuals discussing their perspective on cryptocurrency, and we can be wrong, and you should always do your own research. And the first topic we're going to talk about today is somewhat predictably the Bitcoin US spot ETF finally being approved. So, Joe, first question really is, how significant is this for Bitcoin?
Well, I think it's a huge round of applause for everyone in the industry. I'm just so happy we're finally at this moment. It feels like an eternity from when we first saw the headlines of people wanting to explore this theme. And now, almost 10 years later, we've been in the industry for over 10 years. We're finally seeing this watershed moment where everything changes from now. How about you? How are you feeling about it?
Yeah, I think it's a very symbolic moment. I think it adds an extra evidence of legitimacy to Bitcoin, and it has been 10 years in the making. So the Winklevoss brothers submitted the first ETF application back in 2013, and I think it was rejected around 2014, maybe 2015. And it's always been something crypto enthusiasts have looked forward to. Interestingly, we have had spot Bitcoin ETFs approved in other countries, I think Canada, and the US has previously approved a futures-based ETF for Bitcoin as well. Um, what do you think is going to be the main difference for Bitcoin on this ETF versus what we've had previously, Joe?
I mean, I think first of all, right, everybody around the world looks towards what the US market does to set the precedents. So it's all well and good. Say, for example, I believe in Japan as well, it was the first country in the world to legalize Bitcoin as legal tender. It was significant for the industry, but if you notice the rest of the world, they didn't really move an eyelid. But whenever the US makes a move like this, the US is the most liquidly traded currency in the world. It's a lot more significant than say a small discrete country. Numbers economically, numbers wise, Canada, for example, their economy is a lot smaller. So if there's a product that's listed in Canadian dollars or a Japanese product in Japanese yen, sure, it becomes technically tradable, but not in a sense of huge capital inflows are going to flow from institution to institution into the space in a way that it can do now with a proper spot product on a proper US US exchanges as well, approved by the US regulators. So you reminded me of a moment that 10 years ago when the Winklevoss brothers first applied for the ETF. The dialogue there was of huge excitement. Everybody in the industry wanted this to happen, and we were kind of in disbelief actually that it got rejected. Hindsight tells us, sure, that they were probably right to do so, but it didn't stop us from feeling bitter. Us being in the industry, us being advocates of Bitcoin, long-term bulls. But yeah, I remember back in the day, they used to criticize things like, look, the market's not big enough yet. It's not liquid enough yet. The custodianship, the storage of these Bitcoins on a mass scale hasn't been figured out yet, and how to keep people safe and secure. And I'm glad along the way that, although there's been a lot of back and forth with the regulators and the crypto community, we've come to this moment now where, it's a proper traded product on the US markets.
Yeah, and I would add to that, with this being a spot ETF, it's really a big upgrade to what we've had before in the US. So a futures ETF has been live for about a year or so, and the ETF doesn't actually purchase any underlying Bitcoin. The I don't know all of the technicalities, but they fundamentally do not have to hold any Bitcoin when someone purchases their Bitcoin ETF, and instead they use derivatives and other financial instruments to try and provide that exposure. And this is very much different because now, if you purchase the BlackRock ETF for Bitcoin, BlackRock will also hold the equivalent amount of Bitcoin as a custodian for you. So it kind of really means that financial institutions are properly interacting with Bitcoin itself rather than just like trading it at a distance with derivatives.
Yeah, that's a really important point to emphasize on, actually. Yeah, you're absolutely right. Before this point, the underlying asset was never traded. And what was traded before is derivative, or we call that a synthetic product, really, where the underlying asset isn't traded. But when the underlying asset is traded, it's hard to overstate the significance of that on the financial markets, right? We're actually talking about Bitcoins being moved from an exchange onto, we'd assume, a cold wallet and not being touched. These Bitcoins are being taken permanently, or as long as the holders hold their ETF, permanently out of circulation. And so it's kind of what gold tried to achieve with its gold standard, but over the years, the accounting of that physical gold in those safes became really convoluted. People started trading notes. Money was the first representation of a gold IOU, right? And then we started to create debt against these notes, and then it just became very loosely accounted for. So, gold bugs nowadays, I can make it comparable. They see holding the actual physical gold, in a sense, as more valuable than holding a note of paper that says this vault owes you this piece of gold. Sure, you may get some that are more legitimate than others, but there is a huge amount of unaccounted for gold out there. But with a spot product, a spot Bitcoin ETF, that will never happen, especially as if it's regulated and monitored by the SEC, which I'd imagine it is. They would have a report saying how much capital has flowed into this ETF, how many Bitcoins have you bought, and I'd expect them to have to report on this, if not weekly, monthly, perhaps even daily as well. And I used to work in banking industry, and there were times where banks have to report what's called tier one capital, the amount of cash they have at hand against their loans, to the regulators almost on a nightly basis. And then imagine the same process exist for ETFs on the US stock market.
Yeah, it's really cool to see how the reporting might change for an ETF. So, as you alluded to, if you buy a gold ETF, you will never actually see the gold and you would never be able to visit it. And if you asked for your ETF to be redeemed for gold, you would also be rejected unless you had like hundreds of millions. If you don't have that, you're not really worth the effort for them. And I think the Bitcoin ETF could be a really good demonstration of the benefits of blockchain. For example, if you wanted to verify that your Bitcoin ETF is backed by Bitcoin, potentially the ETF fund providers could give you a wallet address where you could check on the blockchain yourself that it is actually there. Whereas with a gold ETF, they have auditors come in and then they have a certificate that says the gold ETF is being run in a compliant way. It's kind of like reassurance, but it doesn't really give you the full transparency that a Bitcoin ETF could provide when you provide the blockchain wallet addresses. So I think that will be. I don't think the ETF fund providers have communicated any strategy like this, but I think that's one of the things I'm looking for next is whether they provide that transparency, which I think would be really cool.
I love it. That's a pretty bold prediction that you can only hear from us right here, right now. Actually, I totally back you on this one. I'm going to call it as a big watershed moment for the history of the world, that people in the community are going to point to certain Bitcoin addresses because the amounts that are moving aren't small. We're talking 2, 3, 400 million at a time. They're going to point to a Bitcoin address and say, this is Grayscale's ETF holding. This is Cathie Wood's ETF holding. And yeah, it's a level of transparency the world has never seen before. You cannot ask for a transparent audit for on gold, or if you do, sure, it's through an accounting company who, you know, perhaps you can publicly verify, but which accounting firm out there has not been called out at some point for a failed audit? Practically all of them have. But you know, with this technology, blockchain technology in its truest form, we can see very clearly an address with an amount of Bitcoin in it. And if you've bought into that a couple of $1 million, you'll be able to see that wallet address increase by the corresponding amount of $1 million that you just bought for that ETF in the following days and weeks. And so that, in my mind, is huge. And I'm so excited for where this goes in the future. It's unreal.
Yeah, and it's really cool that you pointed out, even if the fund providers don't want to share their wallet addresses, the community will figure it out anyway, and
We'll
it's
figure
all
it out.
transparent on the blockchain. So
You
in
heard
the
it here. We will
yeah,
display it on DefiDive at some point. You'll see it.
yeah, yeah, we should. That would be really cool. So the next thing I wanted to ask you about is, obviously this is very exciting for Bitcoin, but do you think it has any ramifications for other cryptocurrencies, particularly Ethereum?
Yeah, absolutely. Again, we're calling it here and now early on this podcast. The next thing you will see, we're going to guarantee, is an Ethereum ETF. So I think at this stage, we know the regulator enough to make certain assumptions, right? So they want the market to be large enough to the point where, you know, one actor cannot manipulate the market. Bitcoin 10 years ago wasn't that size. Now it's large enough so that it won't be affected by whale traders. Um, and Ethereum is certainly getting there. It's proved its utility with all the banks running pilot projects on Ethereum's network. And it provides a lot more value add feature than just Bitcoin. But the utility is very different between Bitcoin and Ethereum, right? So what we know of being in the industry for so long is that Bitcoin's used as the store of value in the space, whereas Ethereum is used more as a public transaction system and a public accountability system where you can have compute on the Ethereum network and you can build financial products off the back of the Ethereum network. And there is a token for the Ethereum network, but it's not a token that just whose purpose is just to be bought and to be held like Bitcoins. So I'm really excited to see what happens. In terms of developer man hours, more development goes into Ethereum than any other cryptocurrency project out there, including Bitcoins. So although Bitcoins was first to the market, Bitcoin's utility is quite unique. And yeah, super happy to see Bitcoin's ETF list. And yeah, we're calling it here and now. The next one you'll see, the next significant one you'll see is Ethereum's. The real question is, though, perhaps our Uno reverse this question on you is, when will we start to see meme coin ETFs, or will we ever see meme coin ETFs?
Yeah, I was going to ask you the same question, really. My question was more framed around where do you draw the line? And I'm guessing the line will be drawn above meme coins, which means that I'm looking at the DefiDive homepage right now, and Dogecoin is in 11th, which is the highest market cap for a meme coin, and then 10 above that is Avalanche. So after Ethereum, you have Binance Coin, then Solana, then XRP, Cardano, and Avalanche. So I think those are the main contenders for further ETFs. The others inside the top 10, they're stable coins or it's Lido stake DeFi, which wouldn't really make sense to have a ETF for that. So I don't think we'll see a meme coin ETF anytime soon. I would actually be surprised if we even had a Solana ETF. You know, never say never, but I I think that it would be a long way off, just given the difficulty encountered with a Bitcoin ETF. And I think that the fund managers will be keen to submit proposals for Ethereum. But then once you get past Ethereum, the brand awareness for other cryptocurrencies drops massively, particularly amongst the people that would be most likely to purchase ETFs. I think they're not super knowledgeable about crypto. Maybe they've heard of Bitcoin and Ethereum and they want exposure to that. But I think the moment you start talking about like Solana and Cardano, Avalanche, the brand awareness is not there. So maybe the demand is smaller. I think that it will be harder for the SEC to keep saying no to these ETFs, particularly now that Bitcoin is live. But equally, I think the fund providers might not be as keen to launch those ETFs just as much as they were keen to get the Bitcoin ETF live. What do you think?
Yeah, so I guess you've identified the economic side of things, right? If there's no interest in the public market, say for example, to buy Dogecoin through a Dogecoin ETF, um, say Cathie Woods, for example, isn't going to spend the money creating this fund, paying the legals, consistently having to do the accounting for it. If nobody's going to buy that financial products, right? And it's just a product at the end of the day, right? So it's interesting that you frame it in terms of market exposure, right? Because it's true, if nobody knows the brand of Dogecoin beyond the crypto community, who's going to trade it that often, really, compared to, say, for example, Bitcoin's ETF, where there would be a huge community of traditional institutional traders who would trade it liquid every single day. With Dogecoin, I guess being very specific, right? We're looking out for these small moments where, say, for example, Elon Musk might tweet his endorsement for the coin, which just isn't enough, and yet that wouldn't ever get past the SEC's litmus test of, look, is this product, does it provide genuine value to the markets, to the economy? And one of their main remits, although we love to hate the regulators, is to give everybody who partakes in the markets financial protection as well. And I think they would get a bad look if they were listing meme coins. But I always love to paint the devil's advocate case here, and just if we go by the numbers, it's pretty interesting though, because Dogecoin ranked 11th on the DefiDive homepage in terms of market cap. Currently stands at 11.5 billion US dollars of market cap at its current price. That's pretty huge. I just did a quick Google for what's the minimum market cap requirement to be listed on the Nasdaq. This is not an ETF, right? But just for entertainment's sake, to list a company on the Nasdaq, you're talking a market cap of 50 million US dollars. 50 million versus Doges of 11 billion is quite a different scale. So, again, to entertain myself, I was like, what's the minimum market cap to be listed on the S&P 500? Top 500 largest companies pretty much in technology. And that's 15 billion US dollars. So Dogecoin is not far off. And a lot of the coins that you mentioned, the projects like Solana, they easily would fall into that category. So I personally am quite bullish to hope, I hope they will be listed as ETFs. But it'll be interesting to see what happens on that front. I'm quite bullish, and I think it will open the floodgates.
I think the other variable is who is in charge of the SEC. And this kind of brings us on to the next topic, which is Gary Gensler and how the SEC handled the requests and approval, because ultimately it's their decision to some extent, and that's going to impact future ETFs being approved or not. So I wanted to ask, how did you feel about how the SEC handled the spot Bitcoin ETF applications?
I think it could have been handled a lot more transparently and a lot better, to be honest. Gary Gensler has been known for a long time to be very skeptical and very against cryptocurrency, but he doesn't seem to be against it with good merit. Now, let me justify that statement. When he criticizes Bitcoin very publicly, he criticizes an individual's criminal intent. Whereas it doesn't take a 5-year-old to realize that a technology existing does not facilitate, it does not create criminal intent, right? Just because a technology exists, it doesn't make someone a criminal. Yet Gary Gensler's comments constantly associating crypto with criminality is as true as making a statement that water's bad because every criminal that's ever existed has drunk some water at some point in their lives. It's true, but it's just pointless, and it kind of shows a naive misunderstanding of the actual true benefits of the technology, which is the epiphany we all came to separately before working in crypto, is that look, it can replace a lot of the old rails of finance, right? And I don't see why people can't be more excited, especially working in the regulatory arm of the government. I just wish they would be more excited about the fact that look, innovation is coming. It's going to improve the economy if you embrace it correctly, wrap the right rules around it, and just lean into it, right? So, the conclusion we all came to was much of the rails of the current financial system don't need to exist in the same way that it's existed in the past couple of years, where there's been financial fraud after financial fraud, where there's been financial crisis after financial crisis, right? And it's unfortunate to see Gary Gensler hop on the bandwagon of look, money laundering, drugs, criminal intent, whereas the US dollar has done a far better job of that in the past 400 years than Bitcoin's ever done of that in the last 10. Your thoughts?
So, for the benefit of the audience and for our personal entertainment, I thought it would be interesting to read the last two paragraphs of the SEC statement, which appears to well, it was authored by Gary Gensler. It was published by Gary Gensler on the SEC website. So, the closing remarks from Gary Gensler were: though we're merit neutral, I'd note that the underlying assets in metals ETPs, exchange traded products, have consumer and industrial uses, while in contrast, Bitcoin is primarily speculative, volatile asset that's also used for illicit activity, including ransomware, money laundering, sanction evasion, and terrorist financing. While we approve the listing and trading of certain spot Bitcoin exchange traded products today, we do not approve or endorse Bitcoin. Investors should remain cautious about the myriad risks associated with Bitcoin and products whose value is tied to crypto. So, yeah, there's kind of like a lot to unpick with those two paragraphs. I think on a light-hearted note, the way he starts off by saying we're going to be merit neutral and then immediately proceeds to not be merit neutral is kind of funny. It's like one of those people that tells you, I don't mean to cause any offense, but I'm now going to tell you something incredibly offensive, which is kind of funny to see the head of the SEC kind of like talk like that in a formal statement. But as you mentioned, the debate around this doesn't seem to be very nuanced. So we know a lot of criminals wear shoes, but we don't necessarily need to man shoes. The real question that should be asked is, does this thing give criminals and bad people a unfair advantage? And I would like to explore this more in a blog post, but at face value, I'm pretty confident that cash is a superior way to launder money and do all those types of bad things. Bitcoin is fully tracked on the blockchain, and it it may have some benefits to criminals in terms of like not being reversible or other things like that. The fact that it's fully traceable doesn't really make it hugely advantageous over cash notes. And even fiat that's transacted through banks is used for criminal activity. I remember in the UK during COVID, there was tons of scams going on, and someone I knew, their parents fell for a scam, and it involved them being tricked into sending money from their UK bank account to a international bank account. And even though this was in the fiat system, which is reversible, it's regulated, it's centralized, the police can't actually do anything with that because the foreign bank is located in somewhere where the UK police can't really interact or cooperate with the local police force. So again, to your point, it's kind of just slinging mud. And my my take on the SEC's approach is that I think it could have been improved a lot. And you kind of get the feeling that the SEC's decisions are very much shaped by Gary Gensler's personality rather than like a lot of objective decision making. So even in the statement where he approves the Bitcoin ETFs, he still has to sort of get his dig in. And then when you look at the past 6 or so months, he's dragged this process out to be as long as possible. So first, we were expecting the ETFs in Q4 of 2023, like October, November sort of time. And then that got delayed for whatever reason. And then the approval came on deadline day, really, where they couldn't drag it out any further. And I would say that I was surprised to see a lot of unprofessionalism from the SEC and Gary Gensler, really. It just felt like his personality influenced a lot of the handling of the situation. And you kind of just expect the SEC to act in a more grown up kind of way, really.
Absolutely. So, I'm going to put it out there that Gary Gensler should be fired. And I think the US people should owe it to its own citizens. The US citizens owe it to their own country to hire somebody in a position as important as his to be capable of understanding the technology, understanding criminal intent. At the end of the day, if you point to a technology and say that is what created criminal intent, you should be out of a job. You shouldn't be working for a regulator. Work for it. Work for the police first. Work for someone else. Just do something else with your time. If you're making a judgment and you can't point to the line of code that created a terrorist financing deal, then you're clearly talking out your ass. So I think Gary, your job at the SEC is to encourage and foster innovation, right? And you, in that power, with that power, should really be leaning into the fact that, look, there is a community of people that's in your jurisdiction in the US who are very passionate about crypto's economy and the good that it can do. It can bank the underbanked. It can control terrorism financing in ways which the cash system has never been able to do since the US was born. The modern USA is 450 years old, and the US dollar has been absolutely complicit in every single one of these illegal activities that Gary Gensler has just listed: ransomware, money laundering, sanction evasion, and terrorist financing. The US dollar has never stopped these things. So if you can't find a way of stopping these things yourself, clamping down on a technology which will help stop these things isn't going to help either. Bitcoin is more traceable than any other form of cash that's ever existed in the world. And yet you just seem to have missed that small fact that never in the history of the world have we had a more traceable money. Convenient, isn't it? Yet personal opinions are free reign. So, Gary, I don't feel too sorry for you that, you've got mud on your face because the SEC's Twitter got hacked just the day before the listing. I think it made you look a little bit stupid. And the fact that we have to trust somebody like you to help keep people's Bitcoin secure and safe in a regulated market when you can't even keep your own Twitter account safe. It's yeah, I feel the pain, but hey, we'll take it as a win, and we'll hope and pray that the next person in his position hopefully understands technology a little bit better.
Yeah, I agree with you. I think Gary Gensler is probably on borrowed time at the moment. If you think about it in a way, he's managed to annoy everyone who's pro crypto by handling the applications in such a unprofessional manner. And he's also managed to annoy people who are against crypto because ultimately he's approved the ETFs. So I don't understand all of the shadowy politics in the US, but I imagine that not many people are very satisfied with him at the moment. So the next thing I want to talk to you about, Joe, is reactions to the ETF. And we're going to react to other people's reactions and statements. The first person on my shortlist is Cathie Wood, who is the founder and CEO of ARK Invest, and her Bitcoin ETF was approved. And in response to this, she has very boldly predicted $1.5 million per Bitcoin by 2030. And her bear case is a 259K Bitcoin, and her base case is a 683K Bitcoin. What do you think about her predictions?
I think they're incredibly bold, and I really do hope they come true. Cathie Wood is an absolute powerhouse in the money management industry. She's a force to be reckoned with, and people who have tried to come up against her have many have failed. So I really respect what she does. She makes really bold statements and really bold moves. Like, say, for example, her previous investment, which she got a lot of stick for, was backing Tesla, not for a small amount, for literally billions, saying it was undervalued when nobody cared to even look at the electric vehicle industry. And now she's ahead in her fund. And I think her making these bold claims is, yeah, it's just what she does. I think the thing with Cathie is she's not afraid to stick her neck out there and say what she thinks. But she's also the kind of person who really A, puts her money where her mouth is, and B, she does her homework as well. So I'd love to see some of the ARK investment memos to explain how she justifies it, but I'd imagine it's some sort of, as you've done in the past for our blogs, base case against comparing it against the utility of gold, against things like, say, for example, Bitcoin still can be used more as a money transmission network, not in the same way that Visa or MasterCard can do your transactions, but perhaps in the same way, perhaps in a way that gold used to be passed back and forth in the past, but of course in a much more modern and efficient way. So if that's what she's pegging her $1 million or $1.5 million valuation on, then really excited to see that moment.
Yeah, I pretty much agree with you, but I would doubly emphasize that these are very bold predictions. And if I'm being honest with her, I think she is throwing out a large number to try and get publicity and promote her own ETF fund. So On the one hand, I think she is a credible investor, but on the other hand, she definitely has a vested interest in generating publicity, PR for Bitcoin ETFs, and to try and like shield her own products to some extent. And I guess there's good reason to be skeptical that Bitcoin could hit those heights. As a starting point, the the market cap of gold right now is about $13 trillion. And if Bitcoin was to hit $1.5 million, it would work out to a 35 trillion market cap. So that would put Bitcoin as being 3 or 4 more times valuable than gold, which is pretty bold. Um, yeah, I don't think that that could happen, especially not before 2030. Yeah, I would be very confident that Bitcoin is below $1.5 million by 2030. And there's a lot of margin for error. Maybe I'm wrong and Bitcoin's only worth $500,000, for example. And so yeah, I'm very certain that she's kind of just trying to promote her own ETF and drum up excitement. And the way that ARK Invest have done these forecasts, by the way, is they've done it on a benchmarking analysis similar to my blog post, which compared Bitcoin against gold. So what I did about a month ago was benchmark Bitcoin against gold by saying, how good is Bitcoin against gold as a store of value, and then how much of gold is used for investing, and then use that to work out how much should Bitcoin be valued on the basis of its performance against gold. And my numbers came out at about 95K. And ARK Invest have done a similar process. They did what I did for gold, and then they didn't stop there. So they said that we expect Bitcoin to capture X% of the gold market cap. We also expect Bitcoin to capture X% of reserve currency status, and also X% of retail. And they kind of kept on going down that process until they got to these numbers. So I'm sure she's challenged on this. She would definitely point to her analysis, but I would still maintain the view that these numbers are just so bullish that even if her analysis does back this up, it probably means her analysis itself was too optimistic or flawed in some way.
Yeah, reserve. Excuse me. Yeah, reserve currency status is a huge thing, actually. Um, but I agree, it's a pretty bold claim, but I think you can see what she's done there, right? Bear case of 258K, bear case of 1.5 million. That's a pretty wide range there, right? So if it falls somewhere insane, she can always say, look, I was right. So if it's not far off your, 100K at that point, then it's just like, well, she was not as wrong, I guess, because she gave herself such a wide margin of error. But yeah, I think it's all done in a spirit of marketing, as you say. Yeah, she can't market the ETF in many other ways because this kind of financial promotions are generally not allowed in a lot of places. But I don't know. I'd like to see it. She's definitely done her homework for sure. So you'd like to think that even her bear case is going to be correct. And yeah, I agree with you that I think it's more going to be along the lines of 100 to 200K bear case as our expectation. And that's going to be a huge win for the industry and for the world, to be honest. The world needs a more transparent currency that's less politically bound by and controlled and dictated by one jurisdiction.
Yeah, the bear case of 259K does actually look much more realistic. So quite a few people believe and observe that Bitcoin enters bull markets around the halving cycles. And we're expecting the next halving to be in March or April 2024. And then it happens roughly every 4 years. So then that would be in 2028. So if she's predicting like 250K Bitcoin by 2030, that kind of gives Bitcoin the chance to go on a bull market, crash again, have the halving, and then enter 2 years into a bull market. So potentially Bitcoin could peak at like 250K roughly around the time of 2030 as well. But yeah, that's kind of a optimistic outlook for her most bearish prediction to come true. So yeah, I admire the enthusiasm, but remain skeptical like yourself. And the next opinion we have contrasts Cathie Wood completely. So Jamie Dimon has iterated that Bitcoin has no value, although JP Morgan, the bank he effectively owns, well, he's a CEO of, JP Morgan is working with BlackRock to manage the ETF. What are your thoughts on Jamie Dimon's reaction?
So Jamie Dimon has always quite famously been quite against Bitcoin. Again, not mentioning any technical merit or showing any understanding of what the technology can do or how his institution can benefit from the technology at all. But again, citing criminal activity, associating the two, and playing the classic age-old political mind game trick of, look, let's have a rallying call of calling out tax evaders, calling out criminals. To kind of badmouth this technology, right? It's a similar tactic to what Gary Gensler is doing as well, and it's just the same political playbook we've seen for a while. What I think is really disgusting out of Jamie Dimon and how he acts is that he understands that he can't play in an unregulated market. So before Bitcoin was approved as a legal asset to be traded at his financial institution, JP Morgan, he has to say that he's against it. He's not allowed to say he's for it. JP Morgan knows it has to get involved in the crypto business now. And as you alluded to, its announcement that it's going to get involved in the BlackRock ETF demonstrates that, right? But what I don't respect out of Jamie Dimon's approach is that as a investment banking CEO, everybody knows that he has to talk down upon the asset until it's legal and until his bank can buy the asset before he then changes his stance and becomes pro Bitcoin, which is, I mark my words, it will happen. And so it's just the oldest and worst trick in the book, really, of saying to people, don't buy it, it's a scam. They'll buy it themselves before the markets pump. And he knows his voice has authority, right? He knows that if he says to the market, I'm buying Bitcoin, I own Bitcoin, I endorse Bitcoin, my organization trades Bitcoin, then he knows the market's going to pump, and he knows that purchase of Bitcoin for his own pockets is going to be a lot more expensive. So in part, it's a banker being a banker, but it's just a little bit asshole in my opinion. So, I mean, we know he's going to change his stance. I'm calling it out right here, right now. I can see the playbook from an absolute mile off. But yeah, the work's being done. The employees of JP Morgan are out there, showing the world that JP Morgan's working on crypto in various aspects, including Bitcoin. And yeah, they're going to be quite deeply involved by the looks of it in these up and coming ETF listings. Yeah, your thoughts?
Yeah, I agree in general that he has his own motives, and I would add to it that it kind of doesn't really matter what he thinks. He might try to influence others with his opinion, but if he truly does believe that Bitcoin has no value, he's entitled to not buy anything and just carry on with his life, really. I think that sometimes Bitcoin can be controversial within finance circles. So you would be a good example of someone who worked in traditional finance and then was bought into the vision of Bitcoin and left your job and then went to work for your own crypto startups. And then you do also meet people who have a different perspective. I subscribe to the Financial Times and I have an interest in going through the comment sections on Bitcoin articles just to kind of get an overview of what um, different people in the finance industry think. And there's a few people that are supportive, but there's also a lot of people who will say things like Bitcoin's not backed by anything, or we can value an asset by the sum of its discounted cash flows, in which case is zero for Bitcoin. And or the other one will be that gold is more valuable because gold has real life applications, and so on and so forth. I could like debunk each one of those in turn, but it might take a little while. But the point I want to iterate really was that the fact that there are skeptical people does give the opportunity for believers to buy into crypto and dollar cost average. I think that if it was a simple case where Bitcoin was invented and everyone agreed it was the best thing that ever happened, then it would already be extremely valuable and there would be no point in buying it really because there would be no further profits to be made on investing. So I would kind of take it as almost a bit of a blessing that there's some people who don't believe in it and they're perfectly entitled not to. And that just means if you are a believer, that is hopefully a opportunity for you to profit from um, thinking otherwise, really.
Yeah, we're all early adopters at this stage. I think anyone who's owned Bitcoin before this moment, even if it was a couple of days before the ETF, are all early adopters. Get people coming to me saying, "Is it too late? Is it too late?" I'm just like, "No, this is just the start," which makes me hugely excited for what the future brings. And yeah, absolutely, as you say, we need skeptics in the world because they're the ones who can use their money to short the market, and then we'll just collect our dues when the market closes out their shorts. So good luck. Put your money where your mouth is, like we have, and then
Yeah.
we'll see you on the other side.
Bold claims. And it's worth pointing out earlier because I didn't mention it that the Winklevoss brothers uh, were somewhat salty about their Bitcoin ETF being disapproved on the grounds of protecting consumers. So the Winklevoss twins submitted their ETF in 2014. The SEC rejected that ETF to protect investors. And since then, the SEC has successfully protected investors from roughly a 17,000% return on investment. So, yeah, that's the beauty of financial markets is that everyone has an opinion and everyone's trying to figure out what's valuable and what's not valuable. And you can invest your own money according to what your beliefs are.
I love it. But I mean, as you say, right, everyone has an opinion, but talk is cheap. I want it if you're negative, if your opinion is very skeptical about Bitcoin, I would love to see you put your money where your mouth is and short the damn thing. Don't just come to me with your opinions. Show me that you're putting your money where your mouth is, and then I will respect what you say. Come on, Jamie, show us your shorts.
Bold claims. Jamie Dimon called out on the podcast live. Well, the third perspective that I want your reaction to is Arthur Hayes. So he's a somewhat of a controversial Bitcoin trader that we don't need to get into too much. But his outlook is he's expecting potentially a 30% correction to the downside in spring, mainly because of macro reasons. And then the point that I think is more important, that's quite interesting, is he has a long-term concern that ETFs could dry up network fees because if everyone's just holding Bitcoin and the ETFs contribute to people just holding Bitcoin, then that means fewer people are transacting it. And if fewer people are transacting it, that means network fees decline. And then one day when mining stops, there wouldn't be much incentive for miners to secure the network any longer, which I think is a um, a valid criticism. But I really want to hear your perspective on whether that's a big worry and whether the ETFs make this more problematic.
Yeah, no, I love Arthur Hayes' writing. We've known the guy in the industry for quite a while now. He's clearly incredibly clever. His writings are always incredibly well thought out and certainly very troll. Don't always agree with everything, but hey, Arthur, if you're listening, we love what you're doing. We love the fact that you're pushing the industry so hard as well. Um, I think on that point of the concerns about Bitcoin and Bitcoin's ETF and it affecting Bitcoin's network are so I'm going to come at this. Arthur very respectfully comes from a finance background. I'm going to come from this from a techie background because I studied computer science. I'd say from my perspective, it's not as much of a concern, but uh, it's quite a multifaceted um, challenge to unpack this one actually. There's a little bit of economics in there, which is basically like, look, any Bitcoin what you're doing when you're buying Bitcoin into a Bitcoin ETF is you're essentially removing supply from that from the network, right? So you're buying Bitcoin from an exchange, you're putting it in a cold wallet, and that Bitcoin is then at that point not going to circulate. So economics and game theory state that a lot of this behavior is a good amount of this behavior is okay actually and quite healthy. But it doesn't mean that the Bitcoin that remains in existence isn't going to be stopped. You know, people aren't going to stop trading that. People are still going to transact it, and even more so because there's less amount of float that's going around the system. Um, Yeah, and the traditional money markets do work like this as well. There is a lot of money that's out there that's sitting in cash, treasury bills, bonds that's just never touched, and it doesn't ever cause a problem with like the surface economy with everybody spending their $10 bills down at their local 7-Eleven. And you can look up the statistics for this. It's called tier one, tier two, tier three money supply in the US. You know, the actual cash that you see transacted in paper form is actually, you know, sub 1% of all of the cash, all the money that's ever been minted in the US, for example. And Bitcoin's runs under the same kind of economic conditions. Just because you constrain the supply of these bitcoins, it doesn't mean it becomes valueless, and it doesn't necessarily affect the network in a way that you think as well. Um, yeah, first of all, these are long-term holders. They're all bullish holders. And sure, there will be some shorting activity off the back of this held Bitcoin. But it's generally more long side than it is short side. In other words, there are generally more holders, long-term holders, wanting the value to go up than short-term speculators wanting the value to go down. And we can see this from the early statistics that actually Arthur posts from his Bloomberg terminal, showing the capital inflows daily of fresh US dollars into crypto. At the minute, I think the last number he posted was 400 million of long positions in the last 24-hour period. So moving on from the economic side of things, I'd like to talk about the network side of things. Fees are adjustable and scalable and not based off how much Bitcoin is being held, but it's based off of transaction volume. And a transaction volume adds up to a certain amount of bytes, megabytes, kilobytes, for example, for that block. So I believe it's around 1 megabyte a block. Is that correct? Or a couple of hundred kilobytes per block of information, of transaction information. The thing about the economics and game theory of that piece of code is the less transactions that are going through the network, the cheaper it becomes to transact. So there is a bit of a balancing act in there, in the fact that if there's less transactions, more people will be incentivized to trade on the Bitcoin network because transacting will become so cheap on the Bitcoin network. The code from the last halving has already been changed so that the miner fee, the miners, once the new Bitcoin supply diminishes, as it has been doing every halving, their revenue will start to become more and more based on transaction fees. And because of this self-regulating mechanism, because of the game theory and economics that have already been pre-calculated, I think that it's nothing to be worried about, in my opinion. Also, to add to that, not to get too complex, but Bitcoin ordinals, what they're trying to do now in the next generation of Bitcoin's core infrastructure is they're trying to enable smart contract systems on Bitcoin's base network as well. So what that means is there is more utility coming to Bitcoin's network. So when a block's free up, there's more incentive to use it for more complex operations other than just sending Bitcoins back and forth. So watch this space. And yeah, I don't think from my perspective, it's a concern that Bitcoins are going to be bought up by the ETF and parked.
And something I want to just probe a bit more on, because this has been a concern of mine for a while, is do you still think it's nothing to worry about in a very, very long-term perspective? So Bitcoin mining is forecasted to stop around about 2140. So never in our lifetimes, unfortunately, unless we live to be very old. But do you think that this isn't a concern even when all the Bitcoin has been mined and then miners only make revenue off of the transaction fees? Do you think that there would be still enough incentive to keep the Bitcoin network secure once mining is over?
Yeah, absolutely. So again, if I was to talk about the technicalities of the way Bitcoin system works, is that the cost of the computing system to run the Bitcoin network is actually relatively cheap. All it needs is for somebody to do the maths and consider, look, the amount of fees I'm getting per block, or I'm likely to get per block, if that's more than what it costs to run this computer in my house, then they're just going to run the network node, the mining node on their home PC. And let's not forget that it wasn't actually that long ago, 5-6 years ago, where we could still do that, and you can actually still do that today. Actually, now people have figured out that it's not that financially worth it to use your, say for example, your gaming PC. The crypto community are all, they love. There are many gamers. They love to have powerful PCs. A lot of them have figured out that, look, it's not as worth it from the electricity prices that I'm paying, from the equipment that I've got, from the graphics cards that I've got to mine Bitcoins. It's not financially viable for me. But with less people doing it, the financial viability and the rewards from, say, for example, even the fees that go through a network, once that reaches a tipping point of, look, it's going to make you more money, especially in jurisdictions across Asia where computers are very cheap and easily available, cost of electricity is cheap, the opportunities for employment may be less so in other countries. Like if you're in a jurisdiction like that and all you had to do was turn on a computer, run some mining software, and you're just printing money, then people are going to do that, right? So I really think that the design of Bitcoin's network infrastructure is just genius in the way it self-regulates itself. It's super clever. With the less people doing it, the more money there is that goes to the fewer people, so the more people are incentivized to do it. So there'll always be a critical mass of people supporting the Bitcoin network, and at some point, people holding more than a couple hundred grand's worth of Bitcoin, all of these banks at that point, they'll be economically incentivized to run it, to if no one else does want to run this software. And we're talking just one PC is all that's needed. Again, to decentralize it, the more PCs the better. But yeah, it self-regulates the economic incentive to keep the network surviving.
Okay, awesome. I think that brings our audience peace of mind that they can hodl up to 2140 and beyond. The final topic I wanted to talk to you about is Solana. And Solana had a massive 2023 with a 11x return from the bear market bottom to bull market top. And that is specifically a low point of $11 and a high point of $121. So I wanted to get your thoughts on what's going on with Solana.
I think Solana is an absolute powerhouse of technical innovation lately. I think their price rises have been more than justified because of the technology's benefits. Yeah, and the innovation that is brought forward to the space. I think when I was first introduced to Solana, it was through this game called Step N. It was one of these NFTs where it's just like they call it FitFi, fitness finance. So they essentially gamified these fitness tracking apps, and they had different activities like if you'd walk a couple of miles with this NFT shoe, you know, it would bring on certain traits, certain rarities, and it would kind of appeal to the sneaker head in you. And you'd want to collect these sneakers and track your steps with this app because it's essentially it would equate to financial reward. But then it died a bit of a death because it's like a lot of these things in the NFT markets, the economics behind it were a little bit flawed. But I think the one thing that I certainly didn't realize was how the transactions were as quick and efficient as they were on the Solana network. I got to a point where I just deleted the app and I just didn't want to look at it. And then a lot of people started asking me, why Solana's price kept on rising. And when I looked into it when I looked into their transaction graph, I realized that the Solana network transacts a lot higher volume than Bitcoin and Ethereum's network combined. And at that point, I thought, wow, with Bitcoin, we had to wait for 10 minutes per Bitcoin block for your transactions to be confirmed. You'd have to wait at times the best part of an hour before you're confident that the transaction has 6 confirmations. We're told that 6 confirmations is a safe place to be. And the Ethereum network, on the other hand, we had to wait 12 seconds per confirmation. But the big flaw and a big challenge that the traditional markets always pose against cryptocurrency is that look at the Visa and MasterCard and Amex network. You tap a transaction, and within half a second, you get a confirmation that the money's been transferred. Cryptocurrency hasn't been able to largely do that yet, up until Solana came through. And what Solana's done is increase the transaction throughput from I believe Bitcoin's is about 7 transactions a second to Ethereum's 15 transactions a second. But Solana not only proposes, but is actually performing 65,000 transactions per second as of right now. And so if you think of what that means for, compute times, for transaction throughputs, that's huge, and that's what I certainly call innovation right there.
So, for context, I'm mainly invested in Bitcoin, Ethereum, and a few layer 2 scaling solutions for Ethereum. And I want to ask a very uneducated question, and that is, do you really think the world needs more layer 1 proof of stake blockchains? I appreciate that Solana might be faster and better, but given that maybe Ethereum itself is still trying to work out its own real life use cases, do you think that we really need another blockchain like Solana?
You know, I want to say no because I come from the same camp as you, right? I do own I was invested quite early in Polygon Matic, which is a layer 2 solution on top of the Ethereum network that increases the transaction throughput enormously. I can't remember the statistic off the top of my head, but I believe it's either in the hundreds or thousands of transactions per second. And so, the more that you play on these layer 2 solutions, the more you realize actually it's a bit of a pain, right? You got to bridge tokens and then transfer them to a slightly different address, or maybe it's in the same wallet, but you have to change the network. And then once the token's on bridged on one network, you've got to unbridge them and stuff like that. And you have to wait half an hour sometimes, you have to wait a day other times. It's just the last thing I need is another layer 1 solution. And layer 1's not like layer 2. When we're talking about layers, let's for the benefit of the listeners, let's describe what this activity is actually. You hold say for example, a meme coin on the Ethereum network. It's always in the Ethereum network. This layer 1 is Ethereum. Layer 2 is, say for example, whatever's on the Matic network, and you can have tokens within that layer 2 network. But to transfer it from that layer 2 network to another layer 1, you don't just have to transfer it back to Ethereum, but you have to transfer it from Ethereum to Solana, for example. And so this is just getting like ridiculously complex at this stage. But let me explain to you why I think Solana has had as much price increase and popularity as it has. So I think this is being led by the gaming market, the GameFi market. What games need is cheap computing power, because the quicker the messages that can be sent backwards and forwards, the more engaging this online game experience is going to be. Bitcoin and Ethereum can't do that, especially when you're asking for, a couple of cents per transaction. There's only so much transacting that's going to happen if you charge people high amounts of money to do it. When Solana proposes 65 transactions per second at a fraction of a cent, it doesn't just encourage game developers to develop their games on Solana because it's cheaper to do so. It actually incentivizes economic activity. And so the reason why I bring this up is because there was a Nobel Prize winning economist called Milton Friedman. So a lot of the world's economies are built off what this guy said. And he proposed a theory that monetary velocity is central to growing an economy. What that means is transacting back and forth is key to growing an economy. And if transacting back and forth on the Solana network is not just 10 times, but 100 times cheaper than the Ethereum network, the Bitcoin network, or even a layer 2 solution on the Ethereum network, then that economy is just going to grow. And as complex as we can get with the technical explanations, look, Solana's cheap and quick to transact on. So a lot of these traders are like, why the hell not? It's better. It's cheaper. I can do more trades for less amount of money, for quicker. And so with that increased trading volume, there's increased investment. And with that increased investment becomes increased total value locked, increased staking, and an upwards price pressure on Solana's token price.
Yep, that makes sense. To sort of phrase it back to you, so you're saying that with Solana being quicker and cheaper, that encourages more trading volumes, and potentially it can also carve out niches like in gaming, where potentially Ethereum's gas fees are just so high that it makes certain types of trades completely uneconomical to perform.
Absolutely.
So my last talking point with you, Joe, is I want to ask, what do you think is the next big thing after the ETF?
So we're really looking into real world assets. I think 2024 is going to be the year where the innovation is really going to explode in a space. And what real world assets are is essentially where a house deed, or say for example a car ownership slip, is going to be represented on blockchain through a format such as NFTs or something technologically similar. Um, and they're going to go mainstream, and it's going to be big. Yeah, asset management industry is huge, which is why we DefiDive is in that industry as well. And real world assets is going to pave the way for it to happen, for many assets to be digitized all around the world.
And can you just provide a very quick example of what a real world asset is and how it would become digitized and what the benefit of that is?
So again, in the spirit of increasing the ease of transactions, the most basic example that I'd like to give is of a house deed. Buying a house is represented by you giving cash to um, the owner's lawyer, who will then prepare the paperwork to write to the land office to get the house deed handed from the current owner or the current owner's bank over to your lawyer, and then into your hands. And then this process generally takes a couple of days at the very least, if not months, right? So, what they mean by real world assets is the house deed will be essentially represented by a token. And if you just think, imagine if buying a house was as simple as making a deposit on your online wallet app, receiving the house deed as a token in your wallet, and you just getting the keys to your house. It removes so many intermediaries and is obvious. And I give the house as just one example, but in reality, most markets, stock market, the bond market, the biggest markets in the world, the biggest money markets, all trade off a digitized paper system. So stocks used to be represented by stock certificates. They're now parked in what we call custodian banks, and they will create a digital version of this stock, which can then be traded and managed by a bank. But that system is it's old and it's redundant and it needs replacing, and it needs replacing by a tokenized style system where every single transaction can be transparently audited, and it can happen a lot quicker with a lot less intermediaries.
Yeah, I'm really excited in this area too because I think it's a very clear opportunity for crypto to start solving real world problems. And as you alluded to, buying and selling homes is a good example because it's an incredibly painful process. And I think that real world assets are going to become very big for three main reasons. So the first reason would be a consumer benefit. So buying a house is very messy and complicated. It involves making offers that can be accepted and rejected, offers that can be outbid. It's a really painful, annoying process in general. So that's the consumer benefit. Secondly, there's a industry benefit. I don't agree with this, but in the 1980s, Morgan Stanley invented mortgage-backed securities, and that essentially made real estate a financial asset that could be traded. Mortgage-backed securities weren't really a perfect solution to this, and there's still a lot of problems involved in the finance industry getting involved in property, particularly with the subprime mortgage bubble that caused the financial crisis. And from an industry perspective, this can help improve the transparency of what property is behind the actual financial instrument. And it can also just lead to higher trading volumes and more opportunities for banks to make money. So there's a very big industry incentive for this to become a reality. And also the third perspective are governments. So there's a lot of friction that happens with property, with wills, a lot of clunky financial architecture, and Western governments around the world are desperate for GDP growth. And the only reliable way to achieve GDP growth without growing a population is to improve productivity. So if real world assets can lower the friction for buying and selling homes, for example, You then have a more mobile labor force that's easy to move around for work opportunities and a higher transaction of property sales. So that really helps governments out as well. It remains to be seen whether they would lean into Ethereum or use their own um, cryptocurrencies. But from all three angles, there's a definite growing demand for real world assets. And yeah, it'll be really interesting to see if this becomes more of a reality in 2024.
Yeah, let's keep our eyes peeled and we'll report it when we see it.
And then last thing before we wrap up, we've been really busy at DefiDive for the past couple of months. Are there any updates you want to share that you're excited about?
Yeah, absolutely. So at the back end of last year, we really leaned into our asset management feature and we managed to launch the beta version of that. So it's now live. So the feature which I've been looking forward to the most is being able to paste an Ethereum address or connect a wallet to DefiDive and to be able to see all of the assets and as well as their asset performance in the last time period, whether it be a last day, the last 7 days, the last month, or the last year, or since the portfolio began, or since that address became active. So right now the product's in beta, so we're still increasing the functionality of what it can do. But already it's changed my workflow in the fact that I can log in every morning, see what my assets are doing, and very quickly get up to date on the news relating to that asset as well. So I think it's a combination of those factors and features that really helps make my life a bit more convenient.
Am I right in thinking that a user just needs to go to defidive.com and paste in a wallet address to the search bar on the homepage, and then they'll get a summary of the holdings of that wallet?
Absolutely. So right now they can see the tokens in that wallet, and they can also see NFTs in that wallet and the associated value. But let's not forget some of the features that are coming. So very soon you'll be able to monitor your loan and staking positions, get full reports of what's happened. And also there are some sneak peek features such as being able to monitor a transaction as it happens in real time on the blockchain as well. So paste the transaction ID in the terminal bar as well, and you'll see it come up.
Okay, awesome. I'm going to check that out now. So it's been a pleasure talking to you, Joe. I've really enjoyed it. And just one final reminder for our audience that none of this is financial advice. This is just two people sharing their thoughts on the crypto industry, and you should do your own research before making any type of investment.
Cheers, Josh. I really enjoyed this as well. I look forward to what 2024 brings.
Awesome. Cheers, Joe.